Let's start with a thought experiment. A single share of Apple stock currently costs more than a brand new MacBook Air. Or consider this. In just 3 trading days, the chip company NVIDIA added the entire gross domestic product of Greece to its market capitalization. These entities aren't just big companies. They are digital nation-states that influence our daily lives in ways we're only beginning to understand. Today, we're going behind the curtain of 9 of these digital empires. Over the next 15 minutes, I'll show you what these giants actually sell, break down the pivotal moments that launched them past the $1 trillion mark, and explore why they don't seem to be losing momentum. This is the story of modern power. No fluff, no buzzwords. Let's get into it. NVIDIA, from napkin sketch to AI engine. It all started in 1993 at a Denny's, where 3 engineers sketched an idea for a new chip on a napkin. 31 years later, that humble sketch has evolved into the engine powering nearly every significant AI breakthrough on the planet. Their flagship product, the H100 GPU, is less a piece of hardware and more a license to print money. A single chip sells for $30,000, and you need thousands of them to train a model like ChatGPT. The financial results are staggering. Last year, NVIDIA's revenue skyrocketed 126% to $130 billion, with unbelievable gross margins around 78%. The company joined the $1 trillion club in May 2023, when Wall Street decided the future of technology was inextricably linked to AI. But the secret to their enduring power isn't just the chip. It's CUDA, their proprietary software stack. CUDA is the language that unlocks the power of NVIDIA's chips, creating a deep protective moat that prevents their hardware from being easily swapped out for a cheaper alternative. Microsoft, Windows in the rear view, cloud in the fast lane. For decades, Microsoft was defined by the beige computer box running Word and Excel. Then, Satya Nadella took the helm, saw the burgeoning world of cloud computing, and made a company-altering decision to go all in. That bet transformed the company. Their cloud platform, Azure, is now a monster, operating at a $110 billion annual run rate and still growing at 30% each year. This was a fundamental reinvention. A $75 million investment in a small lab called OpenAI in 2019 is now valued at roughly $30 billion, giving Microsoft a pole position in the AI race. Add the massive Activision acquisition, and their Xbox Game Pass is quickly becoming the Netflix of gaming. When the stock crossed the $3 trillion mark in January 2024, it symbolized a profound shift. Investors finally stopped viewing Microsoft as a sleepy legacy firm and started valuing it for what it had become, a relentless subscription machine embedded in every facet of modern business and entertainment. Apple, the iPhone tax that keeps on giving. The modern story of Apple has 3 acts. First, the iMac saved the company from bankruptcy. Second, the iPhone transformed it into a pop culture juggernaut. And third, the masterstroke, services, which turned that massive hardware base into a recurring revenue empire. Roughly 200 million people upgrade their iPhones every year. This cycle acts as a tax on human attention. Once inside Apple's walled garden, the ecosystem is engineered to keep you there, dinging you for App Store purchases, iCloud storage, Apple Music, and AppleCare. The profitability is astonishing. The gross margin on Apple services is a jaw-dropping 73%, nearly triple the margin they make on an iPhone. Apple first hit a $3 trillion valuation in January 2022. That milestone was achieved when investors grasped that Apple wasn't just selling phones anymore. They were selling a lifestyle membership, a desirable club that happens to include a phone as your membership card. Amazon, how books became the everything flywheel. Jeff Bezos started his empire with books for a strategic reason. They have standardized product codes and are cheap to ship. This allowed him to perfect a logistics machine that, once humming, could be used to ship anything. But the true stroke of genius was turning the massive, expensive infrastructure he'd built to run Amazon.com into a public utility, Amazon Web Services, or AWS. Today, the retail side of Amazon operates on razor-thin margins. Meanwhile, AWS is a profit gusher, posting $90 billion in revenue last year with a lush 38% operating margin. Amazon crossed the trillion-dollar threshold in 2018. The moment came when Wall Street stopped valuing the low-margin retail business alone and realized how much profit from AWS was being used to subsidize the larger company's growth. This fuels a flywheel. Every new Prime subscriber makes shipping more efficient, which funds faster delivery, which attracts more subscribers. Alphabet, owning the memory of the human race. Google Search has become the collective memory of the human race, funded by the most powerful advertising machine ever built. Every time you type a question, you trigger a real-time auction where advertisers bid to reach you. These auctions generate the vast majority of Alphabet's wealth, and it doesn't stop there. YouTube, which Alphabet owns, is the world's second-largest search engine, adding another $31 billion in ad revenue. While ads remain the cash cow, the new growth engine is Google Cloud, on track for $50 billion in revenue and growing faster than its competitors. Alphabet surpassed a $2 trillion valuation in late 2021. This wasn't just a valuation of its existing businesses. Investors began to price in the company's other bets, like Waymo's self-driving cars and DeepMind's AI research, as potential trillion-dollar lottery tickets held under one dominant roof. Meta, the attention black hole. The sheer scale of Meta is hard to comprehend. Its apps, Facebook, Instagram, WhatsApp, Messenger, reach 3.96 billion people monthly. The business model is brutally effective. Keep you scrolling, then sell that captured attention to the highest bidder. When Apple's privacy changes dealt a massive blow to its ad targeting, it was an existential threat. But Mark Zuckerberg pivoted with incredible speed, re-engineering the platforms around short-form video with Reels and investing billions in AI-powered ad optimization to overcome the data loss. The strategy worked, and revenue is back above $134 billion. The company reclaimed its trillion-dollar status in 2024. Investors stopped panicking about TikTok and started pricing in the future upside of projects like their Ray-Ban smart glasses. Meta is playing the long game. If the metaverse arrives, Meta is positioned to own the hardware, the software, and the social graph. If not, they still have a near unbeatable duopoly with Instagram and WhatsApp. Broadcom, the quiet chip roll-up. Broadcom is the quiet titan of tech. Its story is what happens when a private equity mindset takes over a semiconductor company. For 2 decades, CEO Hock Tan has executed a relentless strategy. Acquire companies with essential chip lines / operating costs and leverage market power to raise prices. The result is a powerhouse portfolio of components essential to the digital world. Broadcom technology touches virtually every data center, and the AI boom has been a massive tailwind, with AI-related revenue surging 220% to $12 billion last year. The stock doubled in just 12 months, crossing the trillion-dollar mark in 2024. This wasn't about hype. Investors finally recognized a simple fact. Every single AI server being built with or without an NVIDIA GPU needs a significant amount of Broadcom silicon to function. TSMC, the neutral ground in the chip Cold War. In the entire world, only 3 companies can manufacture a state-of-the-art 3-nanometer chip. Of those, only Taiwan Semiconductor Manufacturing Company, or TSMC, will sell that capability to anyone who can afford it. This makes them indispensable. Tech giants like Apple and NVIDIA are fabless. They design the chips but pay TSMC to actually make them. Maintaining this lead requires unimaginable investment. A single new foundry costs over $20 billion and is obsolete in about 5 years, creating an almost insurmountable barrier to entry. This dominance is reflected in their $90 billion in revenue with a 53% gross margin. The trillion-dollar milestone is its next logical step. It will likely happen the moment investors believe the geopolitical risk surrounding Taiwan has been priced out. When that day comes, the world will value TSMC for what it is, the essential, neutral Switzerland of the semiconductor world. Berkshire Hathaway, the anti-tech bet. Warren Buffett doesn't tweet and still uses a flip phone. Yet the company he built, Berkshire Hathaway, is worth $1 trillion. The secret? Instead of trying to invent the future, Buffett simply buys huge chunks of it. The best example is Apple, which now makes up a colossal 40% of Berkshire's public stock portfolio. But the real engine is a brilliant financial concept: insurance float. Their ownership of GEICO means they collect billions in premiums up front. They get to invest this money, a perpetual zero-interest loan from their customers, before paying it out in claims. This capital is then reinvested into durable assets like railroads and energy utilities. Berkshire crossed the $1 trillion mark in 2024 because investors now see it as the ultimate diversified index fund with built-in downside protection. It's a bet on the enduring strength of the economy itself. In a club defined by innovation, Berkshire is the only member that got there by not trying to be one. So there you have it. 9 companies, 9 different blueprints for scale. We've seen Apple's platform lock-in, Alphabet's data monopoly, NVIDIA's silicon choke point, and Berkshire's classic strategy of simply owning the house. What ties them together is brilliant timing and a structural ability to capture value from the next great wave of technology. They don't just ride the wave, they build the surfboard. The trillion-dollar question now is, who's next? Will it be Tesla with its aggressive integration? Could it be ASML, which holds a monopoly on the machines TSMC needs? Or a new rival we haven't even heard of? Drop your pick in the comments below. If any of these stories surprised you, smash that like button and make sure you subscribe, because we're already scripting the deep dive on the next companies knocking on the $1 trillion door.